Hey guys, it's Crossroads here. Today we're going to talk about PayPal earnings that are coming up on Tuesday in the pre-market. Yes, at the same time as SoFi, which they would not report together, but they always do for some reason. Overall, I think they're going to have a good, solid earnings, not going to blow anything out of the water, except for one measure, which is very important that we'll talk about later, that might very much excite the market. I think that they're going to beat on revenue and EPS, and they'll either have missing guidance or perhaps miss guidance expectations for a couple of reasons. Let's take a deeper look and see what's expected. So here is PayPal's guidance, and you can see transaction margin dollars at the top, 3.6 to 3.65 billion. You can think of this as like the money that they actually make from these transactions. They've shifted away from just pure top line revenue growth and active users as the most important measures under Dan Schulman to something that actually translates to the bottom line. And part of that shift comes with a 5% headwind to their revenue growth on a temporary basis. This is due to them basically going to merchants, talking to them that are using Braintree and saying, hey, we want higher margins in return, for a lower volume. And merchants are understanding where PayPal's coming from. Now, we have seen a little bit more merchants that actually agree to a lower percentage come back to PayPal and say, actually, we want the higher percentage. This was mentioned in the fireside chat in quarter one. So I do expect that revenue and transaction margin dollars will go well. I'll look at my own numbers in just a bit. So here's what the market is actually thinking in terms of PayPal and what they'll do. Analysts come in with an average of 1.16 EPS. And by the way, this is thankfully the first quarter that we've had in a year since PayPal has shifted their EPS measure to include and be more transparent with stock-based compensation. For some reason, the markets could never really figure that one out. Analysts and market expectations kept missing that. And it was very annoying because they were comparing apples and oranges. No longer. So here, I think that analysts are actually right on the money, or at least very, very close in terms of EPS. I'm expecting a cent higher than that, 1.17. And if we look at PayPal's expectations, that's on their high range of their guidance. I think that their top line revenue is interesting as well. They're actually coming in a little bit lower than I expect. Again, PayPal didn't guide on revenue, they guide on transaction margin dollars. However, in part because I don't think the macro was much of a concern through most of the first quarter. I think that actually we even saw, perhaps because of the chaos, a little bit more spending on the front end than was expected. And as a result, I think that they're going to come in around $8 billion for revenue. So that'll be a nice beat that is actually a little bit under whoever is the high estimate. They can do a little bit better as well. Not the most important number, but it is in terms of analysts looking at that beat and that measure. Now, that 5% headwind that's due to Braintree being shifted as far as its strategy, that'll continue until the second half where it starts to abate at that point. So this will be, a solid quarter as a result. Now, as far as revenue and also transaction margin dollars, but mostly revenue, I wanted to show you this chart because this is going to be interesting as it relates to guidance. Now, PayPal might just say, because of the macro uncertainty, that they're not going to guide this year, or not rather this year, this quarter, because they don't know if tariffs will be there or not. It's hard to predict that from one day to the other. I don't know that anybody knows that. I think that they may guide, though, but they will do so a little bit conservatively. But if they do, this is a potential factor that I think sets them up for a tremendous beat in quarter two. Now, they do have some marketing dollars that they have allocated as far as expense in quarter two. And we saw some of those, like the Will Ferrell commercials. And so I don't know if analysts are baking that in for the quarter two expectations yet or not, or if they miss that. Sometimes analysts are focused on so many stocks that they can miss some things. But this right here is a chart that's showing basically the conversion of United States dollars to other currencies. 100 is considered neutral right here. And you can see it's actually under 100 right now. It's in the high 90s. And it's not been that way if we look at over the last 5 years for quite some time. Really, 2022 is the last time that we saw parity in this. Now, you would think that United States dollar weakness is a bad thing. And there is some negatives, but mostly for companies that have overseas revenue, it's very, very important and very significant. That's one of the reasons why PayPal reports their money, their revenue in dollar neutral terms, because this has been a headwind for years. Now, in quarter two, and if we look at just year to date, you can see that it started elevated about 110, That's kind of something that they experienced also if you look at back in the final quarter of the month, the fourth quarter, but it began to decrease and all the way through the first quarter. Now, in the second quarter, since it's actually neutral, if it's neutral the whole second quarter, that's going to be a pretty nice beat on that top line revenue that I don't know that the market is really expecting since they're just so focused on the tariffs. Analysts have been revising their expectations as far as you can see their trends for the EPS. They've been all going downwards. A lot of that is the tariff uncertainty. There is some stuff in Europe. We talked about that as well in a prior thing. So, in essence, this quarter, it'll be good. Next quarter, they might guide pretty conservatively or not at all, and that'll be considered a miss if they do, and it might cause a little bit of downward pressure in the stock, although it's pretty far down, so maybe we don't fall very much. But I think that quarter two might be an outlier in terms of what's actually being expected. Now, for more exciting news, there are some exciting things in this quarter for PayPal beyond just an early read on some of their products. So we already looked at the guidance, but if we looked at active users right here, you can see that their active user count is actually improving. So they actually had the high water market here in quarter four, 22. They ended up looking at some of the strategy under Dan Schulman and saying, hey, it doesn't make sense to essentially pay people to use PayPal that and have no real plan or ideas in place to actually have them be valuable users and members. Let's stop subsidizing them. It ended up causing a headwind as far as active users. But you can see since quarter four, 2023, we've seen continued acceleration. A lot of that is new products. A lot of that is just new growth. They're a global player as well. And you'd expect this number to continue to go up. And you can even see the amount year over year that they're growing. You can also see their monthly accounts. Their monthly is doing quite well, and it's actually accelerating too. But I do expect that they're going to come in with an all-time high on active users. Now, you might say, Roy, why is that important? Well, back in 2022, it wasn't that important when they were focusing on active users at all costs, at top-line revenue at all costs. They were hoping that down the line, it would mean that they could monetize this. Didn't work out that way, and they had to shift away from that strategy. But they were largely just a payments company. Now, under Alex Chriss, they're doing a pivot. They're in the middle of a pivot right now of shifting to a commerce platform. That means products like advertising, and they actually have a real flywheel because they have a lot of products now that are working well for PayPal that will translate into actual revenue down the road. And the number of accounts actually comes into play with this. So I don't know that the market will be like, oh man, this is awesome. PayPal is going to go up 20% as a result of this. I'm not expecting that. I'm not expecting much in terms of price movement yet, but other than macro driven. But this kills a bear case argument that was there a couple of years ago. It's going to be put to rest completely at this time. Now, beyond this, the other thing that we really need to look at is margins and margin rates. So I have a little Excel document here. And I've been keeping track of this for a while, and we'll pull up another document and look at this too. But you can see that margins, this is a gross take rate. And it's a little bit harder to see this on the chart, but if you look at the numbers, their actual take rate and total take continue to climb. And again, that is partly because of monetization of Venmo. That's also partly the strategy of Braintree that we talked about before. This was the other big part of the bear case. The competition was driving margins, that their strategy was basically undercutting the competition, that they had an inferior product, and as a result, this would get lower and lower until PayPal just basically wasn't making any growth or any money at all. Instead, we see a shift in strategy, and that's translating to the bottom line. It will take a little while to play out. I'm still a long-term PayPal holder. I do think that they're going to post an all-time high by 2030. But we're going to see, I think, probably a lot of that rise towards the later part of that once the market really understands what's happening here. Now, there's some other important measures that we need to look at too. So one of those is share count. Here's the shares outstanding, and there's a little bit of a chart grind here. Don't get too excited as far as number of shares. But you can see that they continue to go down actually quite quickly. Let's look at that on an annual basis. just because we can, since they have the full year in. And you can see that they dropped off from 1.077 billion shares to 997. They're actually underneath that when they reported, when they came out with their annual numbers, their 10K. And so they continue to buy back very rapidly. They have $6 billion they expect to buy back this year. And I'm very curious if they ended up front loading some of that just because of the price action on the stock. This was a stock that, as we entered the year, it climbed up to 90s, and now it's in the 60s. And so it's a place where they basically have allocated about $20 billion overall, probably over the next 3 years, to spend towards buybacks. That's a third of their market cap, guys. Like, it's just hard to see much of a difficulty in PayPal like going much lower. It can. It's very macro driven, like everything right now. But over the long term, like the worst thing about PayPal possibly is probably going to be that it's an opportunity cost. Although I think it's an opportunity cost that has a high amount of upside in the future. Now, you can also see here operating costs. They continue to get more efficient. This is something that they spoke about as well in their earnings call in Q4. And I do expect that that will continue to translate all through the year, even as they're building out these new products. We're going to get more reads on Fastlane. We're going to get maybe a little bit of mentioned on PayUSD, the stablecoin, although a lot of that has been through recent announcements over this last week, including a recent video that I've done. Venmo monetization, omni-channel, those are the Will Ferrell commercials, the Verifone partnership, and a lot more as well. They're building something awesome. It's going to take time. This is not a quarter where I think that they're going to blow off the top or anything like that, but it's another good, solid quarter of execution. So with that said, it's a long-term play. I'm here for a long term, and let's see them continue to cook. Let me know what you think in the comments. Is there something particular that you're looking for and expecting in earnings? Is there something that you think is a very important measure that perhaps I didn't cover? There's a lot to PayPal. It's a massive business, and it's always easy to overlook something, especially with all the things that they're cooking up and working on right now. As always, thank you for watching, commenting, and subscribing. And until next time, happy investing.